Hey everyone, this is Matt Donahue with your weekly market update from Mission Financial Planners. In the next 5 minutes, we're going to take you through what happened in the markets last week. I know we have a lot of questions this week about tariffs and what those are going to mean. Let's give it a few days to see how that plays out. Last week, we did see some solid economic performance in the final quarter of 2024. Real GDP grew at about a 2.3% quarter over quarter number. Core PCE, the Fed's preferred inflation gauge, rose at a modest 16 basis points in December. So that's showing some stabilization in prices. Meanwhile, the Federal Reserve held that federal funds rate steady at 4.25 to 4.5%, which means, hey, caution amid the continuing economic resilience that the U.S. economy is showing. Just a thought of the week: the S&P 500. This is a tech concentration risk issue potentially. The S&P 500 is increasingly dominated by the Magnificent Seven, and they come out of the tech sector. That makes up over 50% of the index. Now, this became evident on Monday when the release of DeepSeek's new AI model triggered a sell-off, sending semiconductors down 7.8% and broader tech down 5.6%. While 70% of companies followed in the index ended the day higher, the S&P 500 still followed tech's lead, closing the day 1.5% lower. Despite the disruption, AI's long-term investment thesis remains intact. DeepSeek's efficiencies may lower costs, but computation requirements will likely remain high. So while US tech remains dominant, the sell-off serves as a reminder that innovation does come with uncertainty, but valuations remain stretched. So investors should remain enthusiastic, but stay cautious. Your philosophy quote of the week. This week's wisdom comes from the Stoic philosopher Epictetus. When I see an anxious person, I ask myself, what do they want? For if a person wasn't wanting something outside their own control, why would they be stricken by anxiety? Anxiety creeps up on all of us. I know some people are really worried about the tariffs this week. Some people are worried about my kid is sick. Some people are worried about, am I going to make it to work on time? Are you a nervous investor, right? You can't control most of the things that you're worried about, right? You have to focus on what you can control. And in many cases, the only thing you can control is how you choose to react to those events. So let go of the rest, right? It's a great reminder, especially as we navigate the financial markets and some of the uncertainties that we deal with from day to day. Tax tip of the week: maximize your business deductions. With tax season just around the corner, here's a little known trick. While miscellaneous expense deductions were suspended under the TCJA, the 2016 Tax Cut and Jobs Act, business owners and freelancers can still deduct a wide range of expenses. Some key deductions: tax prep and consulting fees, advertising and marketing costs, business related auto expenses. Make sure you keep a logbook though, because if you're driving personal and driving for business, hey, if they ever come asking, you can show them the records. Professional education and licensing fees, home office expenses, and health insurance premiums, to include Medicare. If you have side income, you might be able to write off those expenses even if you have a full-time job. So talk to your tax advisor to ensure you're optimizing your deductions. February 11th, we're doing a webinar on our financial fitness checkup. That is just in 8 days. I can't believe, we're already into February. We're going to focus on the financial fitness checkup, which a lot of you got in the mail. All of you should have received via email. If you want a copy, let me know. We'll make sure you get one. But we're going to talk about just part of that, which is going to focus on family and financial planning. So family planning. Families change. They are, in many cases, in a constant state of flux. Sometimes they are relatively stable for a long time, and then suddenly a bunch of stuff happens. Somebody gets married, somebody dies, a divorce, a child gets born, right? Those changes impact your financial outlook and some of the things you want to have done. So you want to think about not just these family changes that are coming up, but what does it mean from a financial and tax planning standpoint? Because the tax brackets are different once you get married. Do you file single today? What's it going to mean if you get married? What if you get divorced or your spouse passes away? And once the clock runs out, now you're filing single again, right? So what does all that mean? You want to learn more? Join our webinar on February 11th. It's going to be me, Ken Hamilton, Jason Defoe. We're going to break down those life changes about financial planning and tax strategies. Make sure you register at our website, missionfinancialplanners.com/events. Whew, that's a lot. I didn't even talk about tariffs, right? But if you found this helpful, subscribe and share with your network for personal financial guidance. feel free to reach out to us. You can always get a hold of us at admin@mfplanners.com or give our toll-free number a call, 800-888-3309. Thanks, everyone. Bye-bye.